So thanks very much for coming down to Johannesburg Country Club on behalf of Cresco and the presenters. This is the second part of the day for some of us, and thank you for those of you who came back again. Hopefully you went to board the first time. So this morning, if people are interested, you can please let us know. We spoke about, Brian Day from SAPP talked about what's happening and how SAPP has positively influenced the market. Cresco presented changes to the Eskom tariffs, and a couple of the slides that I'm redoing here with slight change. And then we talked about REX and carbon outside of energy. Mostly renewables focused, but today it's really gas. Gas in the broad sense of the word. I think the idea, each of the speakers have quite bespoke topics. There is a bit of a theme around what's happening in the market. I think the idea is not to debate the issues within the IRP or gas to power specifically, but broadly talk about the topics. And for me, the broad theme of the day is SA is running out of gas. Do we have a plan? How long will the plan take? And how, as renewables continue to penetrate to a certain extent, no-brainer, it's happening, how will gas supplement that in its various forms? And is what government doing now the right thing or not? And what do we needed? And then also the value of balancing, and I think Gerard from NOF can talk about balancing as a concept and how it's worked out there, and then Alex is going to tell us how she's going to individually fix the world on the regulation side. So well done, thank you. Cool, so I think that's it. I'm going to let each of the individual speakers to introduce themselves, and with that, Mr. Mackay, who didn't bring any slides. I think we did agree or we didn't agree, I forget. Thank you.
Excellent, thanks Rob. It's great to be here. How's it everyone? James Mackay, I'm the CEO of the Energy Council. I did have my best death by PowerPoint slides ready, but Rob said, no, it's 5 minutes setting the scene. It's also nice to see the Cresco events growing, so very good, well done. I'm going to just give a little bit of a little bit off the cuff chat, more from a perspective of what's sort of happening at the Energy Council, the business engagement and partnership with government, and some of the engagements that have been happening through NECOM and the Energy Action Plan. So I think if anyone sort of follows Energy Council or myself, over last year, we came out and we said we're being very bullish on building this relationship. I think Business for South Africa leads it at the top. It's a 6-weekly cycle of meeting with the President and Ministers, engaging with the SOEs, with the focus being on energy, transport, logistics, and crime and corruption. So on the energy leg, the Energy Council coordinates that, and we lead also the business participation into NECOM. There's quite a strict governance process around that. NECOM has 10 technical work streams covering all different areas, from power stations all the way through to markets, grid reform, regulations, etc. And the business participation is set up in committees. We have sort of now about over 140 registered business people who participate in engagements at technical work streams with various role players in government and Eskom. So I think overall the relationship has really strengthened over last year. Now last week was the first time the NECOM Energy Action Labs business and the Energy Council, we had quite broad participation. We were invited into that. So that included sort of NERSA, IPP office, DMRE, Eskom, engaging on priority work plan for the year against the objectives of the Energy Action Plan and NECOM, trying to work out, are we well resourced? Do we know what we're doing? Is there accountability? So again, I think, is this going to solve everything, next month? Absolutely not. Yes, we're still going to have load shedding this year, but is it getting better? Definitely. And I think the level of transparency and robustness of the engagement is also getting a lot better. In line with that, really, there's 3 key pillars within the Energy Action Plan, which is really, 1, we have to solve load shedding as quickly as possible. 2, we have to build as much new generation as possible. And that's a little bit of, there's wind and solar, yes, but we really do need dispatchable power. And I think that talks to the kind of theme of gas to power. And then 3rd, we've got to reform the energy sector for sustainability. So I think some of the important parts there is, again, pressure and prioritization of the ERA amendment bill. It's in Parliament. We have firm commitment that it is going to go through in the 6th sitting. We think it's going to be a big ask, but government has continued to back that commitment. And I think really then that sort of creates a direction around moving into a competitive and a multi-market model going forward, which is very important. We've seen also the NTCSA board appointed. They actually formally start, I think, what will be tomorrow, or 1 Feb, with a target to operationalize. But I think if ERA does go through, or when ERA goes through, that really is going to give that legal structure to set up the sort of interim market model, the CPA, all of those good things. So I think from a direction, it is more and more being very clear. There'll be a big message and confidence boost around direction of policy if ERA can go through now within the 6 sittings, so by April, being assented. But then maybe just to kind of come back, the kind of burning question often is always load shedding. There's been quite a lot of modeling, scenario planning, not energy modeling work, scenario planning work that's been gone on in NECOM. And really where it's landed is that on the current plans, if we look at the energy, the EAF, what Eskom is currently doing, the plans to recover that, the technical initiatives, the power stations, that combined with what wind and solar is coming on the system, as well as importantly, dispatchable power. I think gas to power is outside of the 2-year purview to solve load shedding. But certainly I think Eskom are making really good strides in securing imports, the standard offer program, the emergency generation program, the LSRP load shedding reduction program. Got really innovative, good ideas around generator aggregation pilots. And then I think also we see sort of moves on improvements in wheeling, the token wheeling program that was launched or announced by Meridian has also been well supported by Eskom and NECOM. So if one puts all of that, of what we know is being targeted with plans that is being resourced, the model says that we can kind of halve the level of load shedding from 23 to 24 and pretty much eliminate 90% of the 16 gigawatt hours of load shedding in 23 to 25. So at least I think what we're getting and seeing now from the ministerial, presidential, Eskom, IPP office, nurse and public sector, is aligning on a plan that says we know who needs to do what by when, we can monitor this, and there's a growing accountability of how that's going to be done. So maybe then the last point, just in closing off, is kind of coming back to gas to power. Certainly I think one of the aspects that's come through in the modeling, the work that's been done around load shedding is there's a big upside to the amount of PV that can come online over this 24-25, but it's probably the least valuable form of energy. But in the system, we'll take whatever we can get. Next is wind. There's not enough wind. We need a bigger balance of wind. I think the curtailment that's now been announced and hopefully a bit of an extension on or rejigging of timelines in bid window 7 should help that program also to move. So I think that's also positive, and there's upside on that. Then the next most important piece is actually dispatchable power. And there's a lot of uncertainty, and those programs are not sort of running as well as hard as they should. So I think there's quite a lot of focus in saying how can we accelerate that. But that definitely leads into how is gas to power going to come online. We need it to come online a lot sooner than what I think the IRP 23 is indicating. Can we be more flexible? It's not only about public auctions, but can we create market and more sort of delayer that market? So can we have smaller portions of gas to power, not just large scale sort of big public auction CCGT programs? So I think there's a huge amount of thinking that says how do we kind of bring dispatchable power accelerated? We need to scale it up. We need more flexibility in it, because outside of just stabilizing EAF at the power station level, that is the most valuable sort of source of energy for the system, and we need more of it quite urgently. So I think it plays very well into the theme that we have today. I look forward to hearing the insightful and technical solutions. Cool. Thanks, Rob.
So stay up. We are allowing sort of one question at the end of every session and then a couple at the end. Just keep going. So if you have one question for James, please do go through that. And then last comment I didn't mention is we are recording this, so if you don't want to be recorded, cover your face for the whole session. And then the recording will be available to those of you who did register. Thank you. Any questions? If you just use the mic so that we have the full recording.
Great presentation.
Yeah, well done. Cool.
Okay,
Steve,
good.
Thanks.
Good afternoon, everyone. I'm Steve Husbands. I'm Head of Energy Advisory for SLR. So what I'd like to do is first of all talk about what's actually happening in gas. My presentation really will be what oil and gas folk would call fundamentals. This is about supply, demand, economics. I'm not really going to talk about policy. I'm going to talk about, geology, technical stuff, engineering, all that kind of malarkey. So let's see where. Okay, so as Basil Fawlty would describe this, these are perhaps for many of you statements of the bleeding obvious. So, South Africa's key source of supply, as probably most of you know, comes from Mozambique, is Panditomani PPA. That field has been in production since 2004, so it's been running for 20 years. It's been a fairly good run. If you look at what Sasol say, they are saying on a pessimistic case, this could start to go into decline in 2024, so now. So it will start to decline. The decline, the presentation was described as a cliff edge. When I describe what I would say about Panditomani PPA is there will be a shallow decline. It might decline by, on a gross field level, by maybe 15% a year. Now I'm describing how big the field goes. There's then going to be a great big argument if you've got this source of cheap gas as to who gets it. Does Sasol get it? Do other people get it? That's going to be an argument. That is an argument. That will be an argument. But so there's going to be a shallow decline on Panditomani. That's absolutely clear. And then after that, the next biggest source is another field in the region, is a field in Mozambique. That's already contracted to go to Mozambique Gas to Power. After that, I know there are one or two people in the room who are doing their damnedest to bring South African onshore gas to the market. That will grow, but in all honesty, that's still at early stages. That's immature. That will grow, but anytime soon, that will not replace Panditomani supply. That's absolutely clear. And then after that, you've got other bigger discoveries awaiting development. Lipid that could take a while, and then other things yet to find, still to be discovered. So I think the conclusion from those first 2 points is absolutely unequivocal. South Africa requires large gas imports to sustain the industry. To meet current demand, South Africa needs to start importing gas. There are no alternatives to that. That will meet existing demand and provide supply for new projects. These are big, long-term capital investment projects. So South Africa needs, and maybe this comes better from a South African accent rather than a Brit, you need to start making decisions in the next 3 to 6 months. You need to get after it now, because otherwise there are going to be difficult things will start to happen 25, 26, 27. You need to get up. Frankly, the recommendation is you need to get after it. So the import program requires that stakeholders take a long-term view and contract on the basis of, South Africa is moving from being a regional gas market to being a player in the international gas market. So you're now going to be playing by international rules. There's no choice. That's what you'll be doing. You'll be in the international market. Lots of things follow from that. But you will be joining a club where the rules are established. That's it. So you'll be competing with other countries for gas, for infrastructure assets, for money for those assets, for capital, and for attention. So you're in a competition. That's how it is. So the historical market structure in South Africa is somewhat akin to the way most gas markets set up, where you've got a historical incumbent who dominates all aspects of the supply chain. But what most countries do fairly quickly is they reform and they unbundle those, though they split out the commodity and the infrastructure piece. That hasn't happened in South Africa yet. That has to happen. And that's the way what South Africa will be having to do there is do what most other is to go through the journey that most other countries have got. So you've got Sasol, as Nerza have always described them as having an irrefutably dominant position in South African gas. That's going to change. Sasol will have Sasol's contracted sources of supply will decline, imports will grow, so it will become something closer to a market where you've got competing suppliers, and a split of infrastructure and commodity. So it becomes closer to international norms. From what we can tell, Sasol appear to have revised their gas strategy. They are, and by that I mean Sasol used to de facto act as the aggregator. So if you wanted to buy gas, Sasol would supply it to your plant fence. So you didn't have to think about it. They appear to be saying we're not going to do that anymore. So you're going to the country will need to find new people who will supply gas from some port of import to a plant fence. It's not quite obvious who's going to do that. It's fairly obvious it's not going to be Total. It's fairly obvious it ain't going to be. It's not going to be Sasol. It looks fairly clear it's not going to be SAPP. New candidates need to emerge fairly quickly on that to maintain and grow this industry. And that will be needed to make LNG supply work. That will be required. So I've talked there about some of the private sector things that need to happen. In addition to that, then there's the normal institutional, legal, regulatory things. The South African gas market has really been running since 2004, so just 20 years. So markets need to develop, and the institutional, legal and regulatory frameworks around that, they also need to develop. That needs to happen here, but that's normal. In some ways, what we're describing here is gas will become an import commodity in the same way as South Africa imports oil, gasoline, LPG against price references. So it's going to be like that. But gas oftentimes is more commercially complex than the liquid fuels, and takes longer and has longer term investment horizons. So that needs to be taken into account. The last point here is, it builds the point James made, is that gas really does have a big possibility to provide a big contribution to help the electricity crisis and the gas crisis. There will be if you do nothing, there will be a gas crisis. I don't expect a Nobel Prize for that. That will happen. And gas has the potential, the proven potential, to fuel huge amounts of dispatchable generation. Renewables on their own will not help you on the dispatchable side. Dispatchable is really important, and it can provide a transition fuel to help evolve the economy. But my strong recommendation to any of you who can make a difference here is urgent action is required to turn this potential into reality. So I've kind of told you what I'm going to tell you, and then I'll tell you again. Right, what am I saying here? So what am I saying is you're going global. So from a global perspective, there are 3 key gas hubs: North America, Europe, Northeast Asia. Each of those hubs has got an associated index. North America is the export markets. Europe and Northeast Asia are import markets. So, with the greatest respect to the folk at NERSA, the benchmark, if you're importing, you benchmark to the natural exporter. The natural benchmark for South Africa is going to be Henry Hub. That's absolutely clear. So it'll be the price that is sustainable is a Henry Hub price, plus all the plus compensation for the elements of the cost of the supply chain building up from that. So that's how that works. Fairly clear. Going on from there, I'm sure most of you know, have read the news for the last year or two. Russia used to be a huge supplier of gas into Europe. In 2022, that changed. I don't expect you to know this to know this in detail, but Germany used to get half its gas from Russia. Europe used to get 30% of its gas. That stopped, and that changed the global gas supply. So Germany ran round in back end of 2022, like they laid a hose from on fire. They were in a dreadful, dreadful mess, and they had to cover their short. And they did that by buying imported LNG and quickly contracting floating storage and regas units, which may be the same. So they were buying the same sort of things that South Africa might have to buy if you want to start importing gas. So therefore, in some ways, South Africa is competing for gas and for FSRUs with potentially with people with very, very good credits. So yeah, that's important to think about that. So I don't expect you to do this in detail. The big players that covered the European short were the US as LNG and the Qataris as LNG. Russian pipe gas supply into Europe cratered. There was a big price spike, amazingly enough, or there were in certain markets. The import markets spiked. The US, the yellow one, didn't really move at all. The import market spiked and then it came back. The US market stayed at pretty well the historical level, up a bit because the export they were exporting lots of LNG. But that's the past. The more interesting thing, always, is what's the future. That's the future market at the moment. So the blue line there is the US market, and the green and the red are the European and the Japanese, the JKM markets. So gas prices, the days of cheap gas are over. There are South African gas prices, and again, I don't expect a price. South African gas prices are going up. If you've had quite a good time by getting very cheap gas from Mozambique and selling it quite cheap. If you're buying internationally priced gas, the suppliers will be looking at those curves as their sources of supply and their alternatives. That will define the price. Those prices will define what you pay. There is no doubt about that. So you might say, is this guy finally going to talk about South Africa and what's going on? Well, yes, I will. Eventually I will. So I've also noticed South Africa's quite big, and effectively there will not be a single national market in the way that we've got one in England or France or Germany. South Africa is so big that I've noticed it takes you 2 hours to fly from Cape Town to Johannesburg. So there'll be two regional markets. There will here be two regional markets, and the markets are defined by infrastructure. So there'll be a market with a hub at Secunda, and if everyone gets their act together, there might be a market in Mossel Bay, but there'll definitely be a market here. So there's a market in the northeast. So effectively, you've got a market for southern Mars and eastern South Africa, with supported by the Romco pipeline and the Lily pipeline and so forth. Obviously, to move gas at scale, you need pipelines. You can do it virtually, but it's not at the same scale. So, I repeat what I've said again. So South Africa's two markets, a northeast one. The northeast supply is depleting, and there's some small onshore on development. New reliable supply will be required as import LNG, and you've got months to make decisions to make that come to, because the lead times to enact those projects are more likely 3 years. So, Rob's telling me I've got 2 minutes, so I'll just tell you what I've said again. So the market is supply constrained. This market is going to be an import market, and you're short of supply. You've got an excess of demand here. The key supply source is on the process of depleting. New supply is required. Demand historically has been dominated by petchem. It's been dominated by Sasol and some industrials. I know many people in the audience are saying, "What's this going to do for me for power?" South Africa really from gas to power. South Africa hasn't really been a gas to power market. Gas has not really featured. So everything I've said about if South Africa wants a gas to power business, it needs to speak very clearly to where's this gas going to come from. There's no getting away from that. You need to meet the existing demand, you need new supply. For gas to power, you need new supply. That supply will be international, priced at the international market with the project lead times. That's inevitable. We think Sasol are very likely to say we don't want to be the aggregator anymore. New aggregators are required. Some of those plans are in the works. There could be one or several aggregators. We think it's fairly clear that if Sasol are getting out of the industrial business, which they look like they will, it looks like the fairly obvious next thing they do is they sell their pipes. fairly clearly, in the short term, international LNG is the only way you'll get the gas at scale and underpin gas to power. You'll have to pay the international price. The likely price reference is the US one, because that's the export one. And you need to pay both the US price and the cost to cover the supply chain. So the liquefaction, the shipping, the regas, the pipe costs, a margin for the supplier. And long-term contracts with technically and financially capable players will be required. That's inevitable. Gas to power, if you look around the world, gas to power is proven at providing dispatchable generation. That gas to power and renewables aren't competing, they're complementary. In most parts of the world, gas and power are converging. We would argue, if you look around the world, if you don't understand power, you can't understand gas. And if you don't understand gas, you won't understand power. You need to understand both. And it's fairly clear that in some of the other countries in the region, I think it's pretty likely that gas is going to be transforming Mozambique. It is going to transform Namibia, and it could transform this country. So I think it could be really good for you. Thank you.
One question.
Shoot.
No, I'm saying, does anyone have a question?
Thank you. Thanks, Steve. Very good. My name's Nick de Block from Connecticut Energy. Steve, you mentioned, I think it's on the slide, okay, so Sasol, in the days of post-Sasol, they are indeed a current aggregator. You said we'd need a new aggregator. Why do we need an aggregator at all?
Okay. The reason I think you'll need an aggregator is, I mean, it's fair because I didn't mention that in the speech. I think the players who are most likely to be the LNG importers have got a view about their business model. So if, being candid about this, the most likely first project into Southern Africa is going to be Total into Matola. And Total are saying they want to produce gas, they want to supply gas, but they will stop, the BCG business will stop at the Mozambique-South Africa border. So they will deliver gas to Rosana Garcia or Kamati Port. And then someone else, some other player or players, will have to make arrangements to buy gas from Total and then supply it to Consol Glass or South 32 or Rigoli or whoever it is. So somebody has got to have to take the role of saying, we've got technical capability, we've got financial capability, we can ship gas, we will buy it from, let's say, Total or Exxon or whoever it might be, instead of and break the bulk. Instead of buying it in 30 petajoules a year, they'll supply 5 petajoules here and 2 petajoules, and they will take the job of doing the daily norms and making the system balance. So the reason why do you need an aggregator is because I don't think the importers are going to do it. I think Sasol doesn't want to do it, and from what I've seen so far, SEF might or might not want to do it, but it's not persuasive that they're going to be capable of doing it in the time available.
Thank you. You were very polite about SEF. Well done. Very diplomatic. Cool. Thank you. So my slide, so I think most people know me, but doing a lot of work in the decarbonisation space, helping large buyers in procuring energy. And as large buyers typically have been focused on the initial part of the journey, which has really been doing bilateral renewable deals, we now see this requirement for balancing power. And obviously gas is one of the key components, but the other component that we see is significant is battery energy storage. Agreed, at the moment we are limited by largely lithium projects, and if you go to an EPC contractor, they're only going to give you lithium. But we do see interesting marketing documents that eventually might end up in a solid thing from other, or solid contract, should I say, from other technologies. But for us, the key focus currently is in this sort of emerging energy storage, working towards this liberalized market. And most large buyers realize that as this day-ahead market comes ahead, the balancing market is there, this concept of responsible generator, balanced responsible generator, and balanced responsible load becomes even more important, and especially at a portfolio level, where perhaps you are a ferrochrome business, you have 7 or 8 ferrochromes, you have 4 or 5 renewable projects, you have some cogen on site, you're buying gas, and now you need to manage all of those predictions down to an hourly reconciliation period. What Cresco has done is we've prepared a demand-supply projection for until the end of 2040. We've modeled the Eskom coal fleet from first principles, a little bit of lack of actual current data per unit of generation, but in totality, we've worked out to an average EAF. We have some of the gas programs that are currently in place, or current projects, and then some of the government programs. We've modeled those down to a project level. Obviously, gas into the future is not as sure as gas today in terms of pricing and things, and generation profile. We've looked at the other generation, Kuberg, pump storage and stuff. Imports, we have a strong view on, having noted from other countries in the region. And then on the renewable side, we've done a detailed analysis of bottom-up of renewable projects on the REAP, and then also from the Cresco database from various RFPs we've been involved in. So we've come up with a long-term projection. Rightly or wrongly, everyone will have an opinion, but it's a curve to talk about. There are some limitations in the current modeling, specifically around embedded generation or rooftop PV. We also haven't included the value of BESS, and there's a few other nuances. So this is currently in development and will always be improving. So in 2024 terms, we have the current coal fleet sitting there. We have largely renewables made up of largely the REAP projects. We have the gas infrastructure and pump storage. And then as the coal comes offline based on decommissioning, and we are running this at the EAF of about 50%, not the aspirational, in my view, IRP 65%. And the decommissioning is based on the JET decommissioning plan, not the Eskom decommissioning plan. There's lots of sources of information out there, as I'm sure you all know. And then we've built up this sort of graph over time until 2040. On the right is the megawatt hours. There we have the IRP 2019 demand and the 2023 demand. And you can see that we actually get reserve margin in theory around 2030 in this space. I know James spoke about load shedding within 2 years and stuff. We haven't gone down to that granularity. This is talking more long-term view. I think the problem we ever have is this is a bit of a distorted view, because this is at a point, well, an average over a year. And in the hour, on the hour, I think we're going to be significant fluctuations around that. And I have a few slides later that talk about that. A little bit renewables focused more than gas, but I think the gas will come out of this. So what we've done is we've modeled at a individual generator level the REAP deals that are going to be built or completed, RMIPP that's hopefully recently achieved financial close. We've excluded Car Powership and Malilo's projects that have not achieved financial close. And then we've taken the Cresco database of projects and we've allocated them against projects that we know are either at financial close in construction, of which we are involved in a number, some we aren't, Sabanya's a few, projects that we know at preferred bidder stage, and then projects that are in good parts of the grid. And we've modeled forward, and that really talks to, we have a lot of granularity and confidence around up to 2030, based on our project pipeline of there. As I've mentioned, currently we significantly understate embedded generation, and that's for version 2 of the analysis there. In 2030, we have a few projects in the system that have not been built either because of grid constraints, and I know the new curtailment rules, I think, will unlock some of that, but also because of the lack of EPC capacity. At the moment in the renewable space, it's sitting at about 5,000 megs based on our engagements with contractors, 2,000 for wind, 3,000 for PV, and that is a constraint. So we have a number of projects in our database that will only come on stream from 2030 onwards. And then going forward, to be honest, that is really a balancing number, and we don't have projects in our database that make up those to get to the shortfall in energy. Now, demand's a bit more difficult. We actually have data on the generation. On the demand side, we have bits and pieces from our work, general reports, but there's no holistic view at the moment, and that's probably why we have one very high level slide, because we don't have that granularity. We were working on it. But we've tried to split the market into large user clients, smaller users, residential and government and so forth, and we've used the IRP 2% demand growth. I think you have to have some hope that energy will grow, and by default, growth in the market. And the bit that comes out of this is that, the large energy users obviously is a significant component, but a lot of those large energy users also use gas for industrial purposes. So we don't have that data currently. I think it will be in process and part of that. But we do know that a large component of this electrical demand could theoretically be higher if they have to convert their current boilers from gas, if it's not utilized or available, or to electrical demand. And for us, that would also then potentially grow the demand curve. But once again, you require electricity to complete the story. Thanks to the Chris Yellen WhatsApp group, I got this extract of the system operator one day in 2023. This is sort of net of coal, and it's an indicative graph, so let's not get stuck on the detail, but it talks about a percentage where the energy is coming through, and I think this is over a 30-hour period. And you can see the wind coming up in the morning, the PV generating. In fact, it's unusual that the PV on the second day wasn't so good, so clearly there was something going on there. You have imported hydro in the purple side. It's not working, purple side, you can see that. And then you have the red that is under the analysis called pipeline gas, but in reality is actual OCGT's diesel generation, okay? We hopefully one day it will be pipeline gas and that, but there. And you can see here how it completely moves during the course of the day, okay? Now, I have some slides later that talk to the requirement in a bit more high level detail, but this is just with the REAP projects that are in place. And a fair bit of embedded generation that I've mentioned, which could offset the demand. If you assume that even we build 80% of what Cresco is predicting off the projects we have in our pipeline, the amount of red here has to be 2 to 3 times as big to cover that gap. In addition to that, if you just look at that, your typical PV and wind profile will probably be pretty consistent to this over time, that the red will be dispatched in a similar erratic nature over time. And to a certain extent, I think that's where we see that the little bit of a, and I said I wouldn't be rude about gas to power, but I'm going to make the comment anyway, is this very simplistic 65% load factor things doesn't actually really talk to kind of what the grid needs. And in fact, in some ways, you need to have a different dispatch profile, because you can see here that it's not as consistent as that. Yes, you can argue you can switch it on and off the time, but from a commercial point of view, I don't believe the very blunt instrument that is priced there talks to what is here going forward. We then tried to take an average day in the year. So this is once again just for indication purposes. We have not modeled every wind and PV at this granularity. So this is one PV project and one wind project to show the example. So in 2024, surprise, surprise, we need load shedding, okay? And we know that over the country, load shedding happens over the day. But on the face of it, obviously, this is not assuming an unplanned maintenance event. This assumes the coal continues. And we require energy in the early evenings during the peak times. Surprise, surprise. No surprise there. We have 11% renewable penetration, some interesting bits on the right, mostly in the afternoon. We all know the issues we have in the situation. Look forward to 2030 based on our allocation. Bigger yellow and green, kind of showed in that previous Eskom slide. Obviously, they're not the same amount of data points there. And now we have 2030 where we still have lack of generation in the early evenings. Luckily, maybe 2030, if we have the IRP 2019 demand view, then we have a significant shortfall. If we're on the IRP 2023, we're not actually too bad from that point of view, but we have significant excess energy now in the middle of the day. And that talks to, obviously, the fact that PV as a price point will come very low. You might have to have technical curtailment, as discussed already, because the grid can't take it. But then this is where you need, obviously, the gas in the afternoon to sort of balance around that. Now we've increased our renewable penetration to sort of 40%. We have a lot of nice green coming in. We have some strong color green in the afternoon. That's a good thing. But nothing really in the evening from that point of view. Step forward to 2040. To be honest, it's the same story, just bigger from that point of view. Significantly more excess energy in the system. Once again, on a typical day here, we will have a demand shortfall on this analysis based on this general there. And this then talks again to the fact that we need significantly more dispatchable generation. And in my view, by this stage, we would have seen significant improvements in the base pricing and technology pricing, and therefore a large amount of this will actually be able to be covered by dispatchable base, grid support, obviously, as well as gas balancing around that. And yes, I know we're quite far away from building a 400 megawatt hour to offset a smelter for 5 hours. But if you go down to the basic level, and we talked about MTN this morning, where they have a 5 megawatt PV, 6 megawatt hour battery, on-site gas and diesel, we could see 100, 200, 300 of those supporting the grid from an embedded point of view, all covering this shortfall and becoming a generator of some sort. Then we have what's actually happening at the moment. So this, once again, is a Chris Yelland extract. We do love his group for random tidbits of information, showing frequency at the moment, and you can imagine it's bouncing all over the place. The slides on the left show that all different times of the day. There's also a load shedding versus grid frequency table that I know is being used. And then we have the sort of movement that the system operator obviously needs to be responsible for these grid flows and minimizing the grid stability. And so this is where I believe ancillary services, not just from gas to power, but ancillary services as a concept and dispatchability is so important to the South African grid. And I know under gas to power there are some ancillary services being considered, but as part of the day-ahead market going forward, that concept of those services out there, and maybe Steve can talk afterwards, not now, on how advanced the UK market is in terms of BESS, because they have about 15 different products that support the grid. We're still early stage in our development, but for me that is also a key part of this dispatchability balancing, because that's all going to be needed. Otherwise, unfortunately, we'll have lots of generation, but there'll be still instability in the grid, which obviously really isn't helping anyone else. Did I catch up for the time? Cool. I'll take one question. Anyone who? Okay. Cool. Thank you, Dieter.
Rob, why is there no discussion at all about municipal waste to energy? I know it's not so simple, but I mean, when we start talking about all the gas pricing and all this stuff, and the thousands and thousands of tons of waste generated every day, I'm talking especially in the metros. Why is this never looked at? Is it accessibility to the waste, or what's the problem?
So we have, over the years, done a few feasibility studies on this. I mean, we actually did, I think our only one that really got to financial close was the landfill gas project, which I know is not waste, but similar concept, under REAP 1, I think, or 2. In the end, they didn't get close to achieving their outputs because it took so long for the municipalities to actually give them access to the waste. And I think that's half the problem that we've seen is it's that whole municipal engagement, PFMA, MFMA, and I think the only other projects that we're aware of that have actually got to financial close are waste co and independent waste companies that aren't reliant on waste at that scale. And I think the other point is traditionally it was quite expensive technology. I believe with the carbon market improving and that price point, that could offset, because I think they are still able to claim carbon credits in its true form. And then I think the other point is that it's so much easier to fund a 100 megawatt PV standard technology with a Sasol off-taker with hopefully a credible IPP on the other side, then go and deal with the opportunistic promoter who has a landfill from the government, this fancy new German technology and things like that, and it's only $20 million and there's lots of moving parts. So I think just from a focus point of view, it just hasn't been the requirement. We're focusing on the other issues. As the price point's going up and we have less interesting projects of scale, I think it will come. We just don't see sheer volume, or maybe it's all sitting in other. Can we do one more?
Yeah, please, if you don't mind.
Okay. Were you just talking to the mic so we can get it on the video?
And I'm not quite sure which one of the presenters is the right person to ask this question, right? So I'm with a bank, and we fund a whole lot of customers that are big users of gas. We've got the cliff coming in 2026 where Sasol say they're turning off the taps, they're going to use it all internally.
Slow decline. Did you not hear the
No,
presentation?
but this is the gas, Sasol's release, right? So they produce that methane-rich gas, which then goes into the rest of the market. They're saying they're going to use that all internally.
Okay.
So that's gone. That's a 20 whatever, how many gigajoules that is, right? What are you saying to your customers that are now big users, and this is 2 years from now, are they sitting on their, how are they thinking about what they're going to do in 2 years from now? I don't know if you're the right person to ask this question. I know this is all about this discussion,
Yeah.
but what are they doing? How are they thinking about it?
So maybe I'll answer one, and then maybe Steve, you can jump in if you have a comment on that. So, to be honest, we work with a lot of large users, including Sasol, and we're not privy to everything they're doing. but at the moment, the bandwidth in their business development teams and stuff is so short that they are trying to close renewable deals to meet their RE targets of 2025, 26. And business development, treasury, and all that stuff's focused on that. They do know this is an issue, but that's next week's problem once we get this done, because most of the large corporates have RE targets. Their management are incentivized to obviously achieve these things, and that seems to be the immediate focus. They are very aware of this issue, and I think there are a few large users in the room and interested in this, but I don't believe it is a full focus as in let's go and have an RFP or let's look at an alternative feasibility study. It's all going to happen too quickly. It's on the agenda, but it's unfortunately not a priority at the moment. Steve, do you have any further comments?
Yeah, a few things to say while we're recorded, and I might say some other things when we're not recorded. I think you look at it from two perspectives. You look at it from a volume perspective, just economically, you're a banker. So look at it from two perspectives, from volume and price. From a volumetric perspective, the supply of gas into the do nothing, the no further activity case is that the volume of gas coming into South Africa will decline. The biggest source will decline. That's just a technical point. This field will go on to decline. So if you're talking to your customers, they need to be doing two things, I would recommend. They need to assume that the price eventually will be based on the international price. And the second thing they need to do now is to start making the arrangements to ensure that that gas will be able to arrive. So that means start talking to aggregators and start ensuring, and this is in the next 3 to 6 months, the gas is to do large gas projects is a 2.5, 3 year game. So if Sasol are going to say we aren't going to supply gas in 2026, let's just take their word for that. In 2023 or 2024, they need to start getting after alternatives right now.
I think there's one more question from the gentleman at the back quickly. Or comment, is that a comment?
No, it's not.
Will you just talk into the, sorry, James? There's a microphone now.
Just to comment on that, I think that Sasol have made it very clear that the gas decline in terms of supply, I think everyone's moving away from calling it a cliff, but that has been put out there, it's in the public domain. And so I don't think that's up for debate, so I think Steve's spot on. I think it's not to defend Sasol, but this is a very high priority. It's being raised also at government level. And they've also made quite clear their position that they're not putting the balance sheet up as the aggregator or to underpin further infrastructure development. So, and this is what kind of is, I think, the catch-22 on this problem, is that they've said, and they've made it also again, I think, quite clear, and this now, I think, is also very much in the public domain as to the position that they're taking on gas. And so they're not going to play that historic role, but the question is who is. So I think you've kind of completely nailed what the gaps are, and the question is who's going to fill that. Is it another SOE? Is it a market, or who else? But yeah, I think, so in their defense, they have made those positions quite clear.
Cool, thank you. Are you making another comment?
Sorry, yeah, I mean, I would say to that, I'm not going to defend or advocate for Sasol, but I think it's fairly clear that fundamentally Sasol are short of gas. So an assumption that you're going to buy from a short is frankly not sustainable. You want to be buying, so again, advice to customers, you want to be buying gas from people who want to sell it to you. You know, real simple stuff, but you want to be buying from producers or people who are long.
Cool. Thank you. Okay. Gerard?
Yep.
Talk about balancing. Thank you.
Afternoon, everyone. The name is Gerard van Armelen. I'm actually an IT guy, data science IT guy, so I'm like a bit fish out of water, but I'm going to try my best. And I'm only allowed to do like 8 minutes, so I have to fly through these slides. I'm going to do like one slide at a go. How do I make it go forward? Arrow. Here we go. Okay, so in terms of the balancing market, there we go, we can go there. The slides I'm going to be presenting to you is built around what's happening in the SAPP. That's the only sort of active real market we have, and they have all these different markets running, and I'll explain, do little slides on them. They currently do have a balancing market available, so there's a market, electricity balancing market, but there's been no transactions on it. So even though the participants have signed up and contracted, been trained, and the system is there and they can do it, currently there has been no transactions. So the best we can do is day-ahead market stuff, and I'll show you some of the day-ahead market stuff as an indication of what can happen. But in these market environments, which is different to what we have now in sort of the wheeling environment in South Africa, is that the forecasting capability becomes extremely important, because you do inform the system operator or your local transmission grid operator what you are going to be doing the next day, whether you're a generator or whether you're a customer, a consumer or a trader. Doing either, you will tell them and you will commit, you will schedule, you'll do your forecasting as best you can on your demand side, supply side, whatever you have in your portfolio, and you'll tell them what it is. And if you are not on those lines, if you exceed the limits by a certain percentage, different markets have different ones, you pay. And it becomes, you have to either trade yourself, get someone that'll supply some power to you in the short term, very short term, in like a couple of hours ahead, or in a balancing market, let's say up to 15, 40, 20, 30 minutes ahead, or you are going to pay. It's going to cost you not to be accurate, not to forecast properly, not to know what's happening. And that's not the case currently. As you know, in wheeling, you've got this like time of use bucket per month. It's like, miles to go before anything. There is actually no penalty. In the SAPP environment currently, they have they are broken into control areas. They tend to be, so the SAPP market is the Southern African region, and the control areas that have to remain in balance with each other tend to be the big utility sort of areas. I think there's 2 areas in South Africa. There's one north, one east. So these are the areas that have to be in balance with each other from a control area perspective. And then within the area, the local grid operator. So in South Africa, there'll be the current transmission company. They will be responsible to settle this balancing market internally. So they'll be balancing internally, and then with the other control areas. I think that's the point of that slide. Just in terms of how the markets operate, and the different markets that are available in SAPP, sort of builds up from stuff, sort of base load stuff, base generation, bilaterals, and then it gets. You have monthly markets where you are buying energy months ahead. You can buy that in time of use slots, so you can buy all your peak, you can buy all your standards several months ahead. Then it becomes weekly, then it becomes daily. That's the very active one. So you're buying energy for the next day. You can see it builds up from the bottom to the top. So the more unsure you are, the closer these markets run. And so a lot of activity on the day ahead market. And the day ahead market has a price then for energy per hour. It gets, all the bids come in, bids and offers come in. There's this clearing algorithm that figures out what the clearing price is for every hour, and all the buyers and the sellers then get that price or contract at that price for the energies for the next day. And then right at the top, getting very, very close now, you have intraday. So if you a couple of hours out, you can trade on the intraday market. The intraday market is a continuous market, like a stock exchange put up, I've got so many megawatts at this price, someone will click and take that. So it's not this auction-based thing where you have clearing and gates and stuff, it's continuous. And then right at the top, which isn't shown here, is the balancing market, which is sort of can be within the hour up to an hour ahead, where you can sell or buy yourself into balance. Because we don't have anything at the moment currently, I've taken the UK market. This is just some statistics, and it's the 2 graphs, the two curves you see, or the 2 histograms, are the day-ahead market price versus the balancing price. So the balancing or the day-ahead market price is a sort of an indication of the types of prices that are present in the day-ahead market. So the day-ahead market is the red curve, so it tends to be a bit narrower, and it looks like a little bit higher, but it depends on whether you're up or down, whether you're generating too much, and all this is renewable, and you have to get rid of it, or whether you're short, you're a customer and you're taking a bit more load and you need to buy. But that's the red curve, sort of. I think this is 2016, 2017, and then the blue curve that goes wide is the balancing market prices. So it's sort of in the same ballpark, looks the same, but the extremes can be heavy. It can be extreme on the either end. Either very low, even negative in some cases, or very high spikes that you can see. So it's sort of, you can sort of make an estimate around what you can see on the day-ahead market, those prices. So I think I'm not going to go through this. This is sort of how traders and participants in the market do. You have all the stuff before the day, planning and contracting and forecasting for capacity, for energy, for transmission rights, and then these ancillary services, a little bit of that, which tends to be handled internally, except for this within the grid operators, but then can also be contracted on a market. Then they actually operate the system, and then you have all these post-dispatch activities, settlements, billing, invoices, all happen sort of after the event, 3 sort of stages. In terms of the ancillary services, I'm not going to go into the detail. I think the point of this slide is the balancing market right on the right-hand side at the bottom there. It's this one. So it sort of has to be available if you participate in the balancing market and you're offering services to a grid operator. Be up within 10 minutes, sort of in that space. Be available. So if they schedule you within 10 minutes, the generation must be up. And I think the minimum that it must be sustainable. They don't guarantee that they'll use you for the hour, but like an hour. You must be able to run for at least an hour. But they could schedule you or request you for maybe 15 minutes or 20 minutes within that hour. So that's sort of the dynamics of that balancing market and the generation to supply there. Obviously, demand response also plays there. So if you have demand response, which goes the other way, demand response is also sort of in that, or there are different specific types of demand response that play in that space. I think the purpose of the balancing market is not complicated. You can be, it's for the grid to remain stable and the frequency, etc. And you get sort of natural floating, which the grid operators take place. It's not an event. It's just some of the generation starts floating too high and some of the load. So there's nothing happened. They just have to keep this thing stable and in balance. But then there's the events. You lose generation. You generate too much. You lose a customer. Load shedding, grid trip, substation problem. So those, the ancillary services and the balancing market play specifically in that space. So you can see the tertiary reserve. This is maybe a repeat of the slide, but that's the one that the SAPP balancing market is, this 10-minute thing up to sort of an hour type of response. In energy markets, depending on which energy market you are, these let's just to go with day-ahead market, you have this auction basis, so everybody puts what they want and what they're prepared to pay, what they want to sell, what they want to earn, and you get this supply and demand curve, and they make a clearing price. Or the intraday market is then continuous. There's like this board going and you can click. But on the balancing market, they make a merit order, so that, let's say, suppliers of generation say, I have so much at this price. And what happens on the system is they just make a stack, a merit order, and the grid operators can decide, they have free choice on that stack. So they can decide which balancing partner they want to commit. And then there's these requests forward and backward messaging that says, are you available? Can you be available in 15? Or you say you are available, you must be available in 10 minutes. The supplier then says, okay, I'm available, and it gets scheduled. So it's sort of a on-the-system, quick messaging, actually, that schedules the actual generator that will be providing the balance. These are time gates. I think the point of this is all finely controlled because it interacts with the other markets. But within the hour, after 10 minutes in the hour, after all the bids and offers have been in, within that hour, you can be scheduled for generation, let's say, on the balancing market, and then run up to the end of the hour. That's the point of that. Just in terms of prices, just for interest, this is the day-ahead market prices. The top curve is all hours for the since 2016, so it's like 7 years worth of stuff. The top one is all hours of the day, all days of the week. So you can see those bands all over the place. Interesting is the sort of the high side, around $300 per megawatt hour. Sort of you can see tracking quite nicely on the right hand side. But these prices, although they're all over the place, are quite heavily reliant on the cycles that we used to: week cycle, weekend cycle, peak, standard, off peak on a day. Those things. Once you take, for instance, this is now just or morning and evening. Evening peak, weekday only. These prices. And you can see if for instance in this space, you can see, or in that space over there, you can get like really good estimates if you're wanting to play the trading game. You can do really good estimates of the types of prices that you could be expecting in maybe a couple of weeks. So it tends to change, or change conditions in the system, change weeks at a time, sort of weekly, monthly, that sort of cycle. But days ahead, weeks ahead, you can do actually quite good estimations of the prices that, if we take this as a proxy for balancing the types of prices that could be available. Same thing, it's the same curve. These are just histograms. So if you take all our box plots, all hours, it looks pretty low. Lots of exceptions. These are all the exceptions, but this is sort of mostly the data sets here. But if you take this is what I was speaking about. PM peak prices only. You want to see whether it's worth it for you. If you take 2023, you see how narrow this was, the last quarter in 2023, how narrow those prices were. So the whole quarter, the evening peak prices were like, close to $300 US per megawatt hour. Those are the types of less, and there's very little variation there. Just so it gives quite a good signal in terms of the stability of that types of pricing. Those are my slides. I hope I can take it to. Yeah.
Thank you. Good. Any questions?
Any questions?
You've talked there about power as a commodity. When do you think you could give this talk, or what conditions would be required to have to give the same talk with gas as a commodity in South Africa?
I'm not understanding the question. For gas?
You've talked about power as a traded market.
Yeah.
The talk today's about gas. What do we have to believe that you could talk about gas as a traded market in South Africa?
I'm not understanding your question. Help me.
So is it the question more?
Is it? Do you want this type of? Are you thinking when, or are you thinking what?
What conditions need to exist to be able to do this for gas?
In the SAPP market, on the gas side,
in this part of the world.
Yeah, no, I don't think I can answer that one. I think it's sort of a gas question. I don't think it's a markets question. In terms of the market side, in terms of the participants of the market, if we're talking about the SAPP market, I don't think that's prohibitive. There are currently IPPs with renewables that don't actually have the plant operational, but they get provisional licensing. So as soon as that capacity becomes available, they can start trading. So from the market side, from the operations of the markets and the participants, that's all in place. So if you have gas and you have a plant, I think it's 6 months and you can be on this market. Maybe that's the answer that you're in.
Thank you.
With this market environment we're moving into, does that mean nobody actually takes responsibility for being absolutely responsible for energy security and having, let's say, this 10 to 15% reserve margin in the grid to be able to always supply? Is that going away and just depends on these hourly contracts?
I think the TSOs, they carry those. I think it's even legislated. They carry that responsibility, and they have to contract because maybe they don't own those assets anymore. They have to contract for those assets to keep this thing in balance. And they have, I think part of the big generation contracts are these responsibilities. If you get that generation contract, you have to supply AGC. There's no question about it. There are bits in that balancing which they open the markets to, and this is one of them. But they still have that responsibility, and they ensure that with their contracts, and there's no getting away from it. It's not like, it's just that the assets that they used to do that with locally was their own. Now it's not. So I mean, the other way, it either goes long-term contract, lots of bilaterals, which make, as we know, or as the variability comes up, they prepare to open some of that up into shorter-term spaces. But I think in the end, the signal is the price is going to fix it. You offer enough price, someone's going to do it. That's the sort of last bit.
So I know I said only one question, but you did so well on the slides. Thank you. You get one more. So you're obviously doing this in SAPP.
Yes.
I know you're helping Eskom.
Just our responsibility in this, we are IT guys, so we are not, as an IT company, so the IT behind all of this, the metering and the trading screens, that's our specific role. We are not the SAPP operating, we are not the market operator. Not in SAPP, there's a SAPP operational body that does that. We won't be the operator in South Africa. We are just enablers,
okay.
IT enablers. Yeah.
So on the IT enablement side, so to get a day-ahead market in South Africa, we need ERA. James says he's going to stand at Parliament and make sure it goes through, so that's good. We obviously have support. We'll get some generators. How quickly do you think it will take Eskom as the TSO to implement a system? Hopefully yours in your case, but if not yours, what is the timing around getting a physical energy day-ahead market? I know a financial day-ahead market is a separate discussion.
I can just, our experience from implementations locally and internationally, probably given that the commercial's in place, the will is there, the money, everything happens. It's 6 to 12 months. After everything's been sorted, now it's an IT problem.
Yeah,
it's an IT problem. Yeah.
Okay. Cool. We've got more questions. Are we allowed?
Good morning. We will have gas by 27. We will have power by 27. How can I enter in the SAPP and securing a minimum? How can I secure my price of the electron?
If you are, I don't know what your role is, but let's say you are an investor, you want to put up a plant, you want to secure that contract.
We will have a plant in Mozambique, in Maputo.
Okay, so if you are in SAPP and you want to sell into South Africa, you want to get a customer in South Africa, I think that's a little bit challenging at the moment just because of where we are. I think some of the traders have opened and have started negotiations with local, with NERSA and Eskom to sort of get that closer so that they can get what should we say,
So NERSA indicated, I mentioned earlier, that they are open for import-export licenses shortly. There's been one application already made unofficially, but it'll next post,
Yeah. So that's what you're into South Africa. If not into South Africa, if in the region, which means South Africa then becomes a single buyer for you, if you are in that space, then becoming a member of the SAPP, is the way to go. And I think the traders that I'm exposed to, I think it's about a couple of months, and your assets don't have to be operational yet, and you've got provisional approval. As soon as that asset starts running, those contracts can run, which means sort of from the regulatory market side, it's the SAPP membership you need, but you need that customer. Those negotiations and that contract is between you and that customer.
So I think 2 points to add to that. So we've done quite a few market studies for SAPP and current assistant applications. So that's under the market participant section. And thanks to Africa Green Co for forcing that door open. And now a few more people are going to walk through it. You theoretically need your utility. So initially you needed utility to sort of sponsor you, a bit like joining a country club. You don't need that anymore, but you still need your utility to support you, because obviously they will fight you at any time. So you'd need EDM, maybe nothing. And then if they've been very clear too, if you're a non-dispatchable generator, you'd need the utility to guarantee your balancing support. If you're a dispatchable generator, then theoretically you are able to trade straight away. So those are a few other requirements, but we've done a lot of this work, and it's coming.
Yeah, it's coming.
It's coming. It's going to be there shortly, especially existing generation. Cool. I'm going to kick you off now.
All right.
Is that okay? Cool. And here to Alex, please start with a joke.
Where is mine? Sorry. Am I just next?
Sorry. Couldn't help you with the top.
Okay. I'm going to move to the next one. Okay, so I'm Alex Vilakis, for those of you who don't know me, and I'm actually just an energy lawyer. I'm part of the team at Allen & Overy. I'm a counsel in that team, and we're a team of about 18 lawyers, and we advise on energy and infrastructure projects. And we're really proud to say that in the last 18 months, we facilitated in closing 1,700 megawatts of private generation. But today is not really about that. Today, I'm just going to take you through a few key policy changes that have been made in gas, recent developments, and nothing, not even half as interesting as anything that's been discussed today, because this part I'm going to try and keep very high level and not bore you in the legislation. So very importantly, gas amendment bill was published in January for public comment up to February of 29th of February. We've all seen the IRP, and there's a really, really good allocation for gas. I'll take you through that shortly. And of course, the DMRE then issued the gas to power program, which I'll also just give you a high-level summary on. I think everyone's spoken a lot about the role of gas under ERAB, and what I mean by that is what the role of gas will be when we have a competitive market and there's more renewables, and a lot has been said about that. It's complementary. We need it for grid stability. We need it for our markets. And I suppose, Steve's going to sort out the question about how we get it. Okay, so gas amendment bill. So the Gas Act as it originally was construed was very much about SASL, it was about ROMCO. And there's been misalignment in that legislation until now in terms of basically what the current policy is on gas and where we see our market going, which is basically driving a competitive market and sustainability. So changes have been made to the Act to basically sort that out, changing the definition of gas. So we're not only talking about piped gas, making room for LNG and other sources of gas. Importantly, the minister's been given extensive powers to make determinations about gas projects, powers to actually basically indicate to the regulator when they should issue a license on additional grounds. So national security, regional growth, and very importantly, integrated power energy projects. So there is very much alignment between what's happening under the gas IPP program and how the Act has been amended. Importantly, when we talk about price regulation of gas, before NERSA's powers were quite basically discretionary. It had to monitor and approve, and if necessary, regulate transmission and storage tariffs. That's changed. They must regulate energy and storage tariffs, and that's obviously taking into account that eventually we'll have a competitive market and won't just be relying on a company like SASL. So public comments until the end of the month. We are looking at it at Allen & Overy if you'd like more details on that. Okay, IRP. So it's been mooted as gas heavy, 7,220 megawatts by 2030, 3,000 ESCOM, 3,000 IPP office, 1,220 power ships, if those will actually happen. And sorry if there's anyone in the room that doesn't agree with that statement, but let's see. Okay, gas IPP program. This isn't comprehensive at all because it isn't obviously what I wanted to focus on for the whole discussion today. But obviously happy to discuss this in detail offline with anyone that's interested. So the structure of the RFP, usual IPP structure. It's ESCOM that's buying capacity, energy, and ancillary services from gas-fired projects. One round, unintegrated structure. So not including all the gas kits. Basically, it's about the energy, and it's up to the basically up to the IPP how it secures its gas supply, which just becomes very interesting in terms of getting buy-in from Transnet. Can be anywhere in South Africa. So 3,000 megawatts of capacity. In total, only 2,000 for this round. Each project can't have more than 1,000 megawatts contracted capacity. So already people have been discussing the fact that the timelines are tight. So they're looking for projects that are actually ready. You have to actually submit a full EA with your bid submission. And bid submission is in August. So that's tight, and I think it would eliminate a lot of prospective projects, is just what we've been told to date. But hopefully there's a few that can actually fill that first gap. So that's everything from me today, guys. I don't know if there's any, I mean, less questions, interested in key thoughts on any of this from the participants in the room.
So I have a question. So let's just talk about NERSA and how they regulate the gas price. So how far do you think they would go in their future role? So traditionally, they've obviously only really been regulating SASL's price, and then people would argue not really regulating. SASL gets what they've done.
Yeah.
But now we have, will the gas being supplied to the LNG or the power ship, or not the power ships, the the generator be regulated in the same way? I believe it does talk to that in the RFP. And then secondly, console glass, the previous one, how do we see that regulated? And then if we have a pipeline, so in the storage industry, you have your pipeline tariff, a storage tariff, a distribution tariff, and now we'll have an aggregator sitting in the middle. Does that mean we're going to end up having 5 or 6 gas tariffs that sort of blended together? Do you see
I
that
actually don't know the
happening?
answer to that. I don't actually know the answer to that, Rob, to be honest. I don't know if anybody else in the room does. I haven't scrutinized it to that level.
Okay, I can have a go at that.
Sure.
I think per the 2004 Act, NERSA only has the right to set a price once they've done the first is a 2-part test. So the first test is, in NERSA's opinion, is there a dominant market player or a dominant market position? And I think what NERSA do is they are, the 2004 Act gives them the right to regulate a trader if they have a dominant position. So therefore, I think they have the right to, this might need to be tested, I think they've got the right to test, if there is a dominant player, I think they can set price for them. Whether they've got the right to set non-dominant players, I think is a question that, as far as I understand, hasn't been tested.
So, I mean, under the current legislation, but definitely under the new Act, it's regulating all.
Yeah, so I guess the point I was trying to make, and if you do have a follow-up comment, and anyone else, so in the petroleum pipelines example,
Yeah.
right, so we have the fuel comes into Durban, and then you have a storage tariff, you have a loading tariff, not that anyone actually pays a separate price to Vopak, you pay one. Then you have a pipeline tariff, then you have another storage tariff in Johannesburg, and then you have the distribution price, which is linked to the fuel levy. So you kind of have 6 tariffs that build up, and then you have the price of the fuel, and then that ends up at your pump, and that's what you and I pay when we think. So it's a fairly complicated process, each with their own NERSA things and NERSA not. Now, if they're going to take the same approach, which broadly the Act is saying in that last bit, to gas, it's going to be impossible.
Yeah, it's going to be complicated.
Yeah, I mean, we could add, maybe that's why things only say 2030 on our projections, but you're adding this huge regulatory burden, whereas to date, Sasol has been doing all of it, the aggregator, we've mentioned this, and therefore they only have one tariff, because they don't need it, it's combined. Whereas now, if you have different parties,
Yeah.
you need to do it. So I think that, I don't know if anyone has an opinion, but
The classic approach to this in other markets is you regulate natural monopolies and you facilitate competitive markets where possible. So from a gas perspective, what that means is the natural monopoly is pipelines, and you encourage position in a market like this, you encourage new entrants into commodity, so then the market full supplies. So in principle, in time, the natural monopoly is the infra play. That's regulation 101. That's what the standard regulatory theory anywhere in the world.
we have a question in the back, question there, and then Yusuf, so we'll do those 3, if that's okay.
On the gas pricing and NERSA, I would say that if we are talking on the maximum energy gas price, even if I would say it's not perfect, but it's clear. If you buy gas by pipe, and we are not talking about the source, because people are thinking that if I buy regasified LNG through the pipeline, I will pay the LNG price. Wrong. They are saying you have 2 prices regulated, gas piped and LNG. So gas piped, it means the trader has to present to NERSA the cost of acquisition, and on top of that, he has the right to add plus 45% profit margin. This is a selling price. Unfortunately, in the past, the only one supplier was taking this selling price as the market price. So monopoly, he could do what he want. On the LNG, they say the GKM is the maximum gas price, or 12% of Brent, and unfortunately today in the international market, You will not find any 12% Brent, but it's another question. And you have another thing saying, if you can't be profitable with GKM and 12% Brent, come to us and we'll discuss. So gas pipe is one methodology, LNG, so the liquefied natural gas is very important, liquefied. On the gas I4P, unfortunately, it's completely confusing. Because for the gas, they are saying that the developer must get LNG from fuel trader or from domestic gas field. They are not saying that you can get gas from domestic field like Brulpara, Kinectico. They are saying, and it's written, LNG from gas field. So this means, if you follow that if you have a gas field in South Africa, you must liquefy it to be granted. So it's stupid. Sorry to be blunt, I'm French, so I'm a little bit... and they also say the developer must buy from a licensed trader, like the Gas Act, I don't remember the number. Perfect, great. So this means one trader in South Africa could be the middleman. Perfect. But they are also saying that this fuel supplier must present or prove the knowledge, the skill that they have a record on supplying 3 international gas power plants in the world. Unfortunately, if you go through a South African trader, he will not have this experience because there is no gas power plant in South Africa. And if you say that you must have a licensed trader, it means the traders, the international LNG or gas suppliers, can't be awarded because they are not licensed. And on the pricing they are mentioning NERSA, but they are not opening the door for the gas pipe. So you don't know how to price that because they are saying you must follow the NERSA methodology for the LNG, but if I'm doing gas pipe, I can't, and it's not really what NERSA says in the methodology. So it's quite confusing. I hope that it will be adjusted before the 31st of July. Thank you, sorry.
That was a good insight. Thank you. Okay.
Hello. I think my question relates somewhat to the previous question. Who is this aimed at? So what we've heard previously is that gas is running out, the gas fields are going down, so we are going to be importing the gas. So if that's the case, gas to power, does that mean this is aimed at a trader that is going to be importing the gas and then somehow converting it into power through a third party? Or is this aimed at somebody that is going to be sourcing the gas locally, in other words, some kind of new gas field, and then converting it into power? Is it aimed at primarily traders based on where I understand we are, and are probably going to be for the next 10, 15 years, importing gas, trading it, and then somewhere converting it? I just wonder, who is this aimed at? Which players in the market is this aimed at? I can understand a Sasol, because Sasol produced it and then sold it, but take them out of the equation, who's left? And if it's not Sasol, who is it?
So, I mean, I think it's a safe assumption to say that it's any other trader as well. But I mean, there's also regulation of tariffs, basically, of prices, even for transmission and storage. So it's all the way down the value chain. But it's understanding, I think Rob's question is a pertinent one. It's understanding basically how that comes out if you basically are regulated all the way down the value chain by NERSA. Do they not just basically regulate at the end of the day, the inputs that make up the price that you actually sell the gas for.
Thanks.
Yusuf Hafaji, representing Pinda Power. I think we have a 320 megawatts in Richards Bay Gas to Power, looking to participate in that program. My question relates to the RFP in terms of a bid for the project with a price linked obviously to the commodities, and then for a 20-year PPA, but then you have the onerous requirements of the regulation by NERSA and to some extent the mandatory requirements of using the VOPAC consortium for the LNG infrastructure. And obviously the storage requirements that's dedicated and shared within that storage. So to me, there's somewhat of a mismatch between the rights of NERSA to regulate while you're bidding in a 20-year PPA with all of the caveats. And then again, the 40 to 65% load factor, the fuel suppliers want volume with very little but flexibility to that range in the volume of molecules. So maybe the question just around regulation and its impact on a 20-year PPA.
So I mean, the regulation provides for cost recovery, right? So it provides basically for a reasonable return on the investment. Very similar. I mean, it's the usual standard cost recovery formulation. So I mean, I think that I don't think actually the idea here is here that NERSA would basically frustrate achievement of these projects.
James has a
Just a quick question, and he can also respond. Rob, just linking back to your presentation, and I'm not exactly sure of the details of how the dispatch profile in the RFP is kind of profiled, but heard lots about it. And if you could just explain or you give your thoughts on the impact of actual bankability for these projects between what the system actually needs versus what's the profile versus what do you think is bankable for kind of greenfields gas?
Yeah, you're right. That was a hard question. Thank you. So, I mean, you talk about between 40 and 65%, and I agree. How are you ever going to sign up an LNG contract under that level? And when are you available, and when can you dispatch, and what is the cost of that? And if you look at my slide, it's not 65% being between 4 a.m. and, it's not hours in the day. Sometimes you're at 20% capacity and sometimes you're at 100% capacity, but you're probably running more than 65% of the day if you look at that slide, because there's always a requirement for energy. It's the question of how much energy you physically need at that point in time. So that obviously doesn't speak to the RFP at all, because the way I understand the RFP is structured, because I think it was a probably good cut and paste of RMIPP, is it like X hours in the day as opposed to be available and I'll dispatch you with 10 minutes if you in SAPP. But agreed, the whole bankability around capacity factors and flow-throughs and all that sort of stuff are obviously quite key. We worked on perhaps some of the powership projects, and so we had quite a bit of an understanding of that process. And yes, the percentage of revenue guaranteed under the capacity has to be significant as a percentage of the total if you have this scenario that's required, or if my graph is correct, to say that you have to be available 24 hours a day, but I only need you 10% here and you need you 100% then, because then your fuel cost is actually a percentage is quite low, but then your availability, I'll shout, your availability is obviously very high. And that obviously then changes the whole dynamic too. So if you come in with a 40% capacity factor, but your actual dispatch profile is the same, you don't have to be a financial model to figure out that doesn't work. Cool. All good. Oh, is it? Okay. Did I do okay? Cool. I don't know if a bank wants to make a quick comment before Jean-François. I mean, we have probably 5 minutes of time, and then I think I'm going to have a beer. It's been 2 presentations already. But if there quick response from a bank on James's question, if anyone wants to put up their hand. Dieter's asked too many questions, so I think he's not allowed. But no, seriously? Okay, cool. And then if I answered that question, good. And then we have the last comment question of the day.
So on the volume, this will be very on the 40% and to 65%. This will be also a little bit challenging for the developer on the management of his fuel contract, because he will have to commit on one volume, can negotiate some flexibility, but at one moment, if ESCOM decides to push more, how this developer could re-invoice the excessive or the additional volume of gas. Because if you are below 40%, ESCOM will pay you some compensation. So probably this compensation could pay your take-or-pay. But if you are asking to push more, so it means you have to buy on the spot market. And I would just want to say that spot market doesn't mean expensive price. It means you will buy the price of today or tomorrow. Can be higher, can be lower. Because unfortunately, when you talk here gas, we had some bad experiences the last years with this story of the power ships, and everyone is now scared. But spot can be expensive or can be cheaper. And this higher this gas I4P unfortunately put a lot of pressure on the shoulders of the IPP developer.
Thank you. So I think with that, we've hopefully solved the world, or very scared, depending on what your view is and different dates. But thank you very much for joining us. If you did officially register, which I assume you did if you got here, the presentations and a recording will be sent shortly. If you would like to get it anyway, Vumilia is available to get your name and number. Please join us afterwards now. We have some drinks and some snacks and lunch, and I appreciate your time this afternoon. Thank you very much.